Pero no hay manera de pararlo. 9:22 de la mañana. Massimiliano Bondurri, founder and CEO de SGMC Capital. Good morning.
Good morning to you.
The main question this morning is if we are experiencing a new financial crisis.
Well, in terms of financial crisis, probably with what the Fed has done over the weekend, basically backstopping any big risks or big basically defaults that would then go into the deposit holders. We probably don't think that we're going to go there. But what we're experiencing is a big crisis with respect to the feeding, with respect to risk sentiment of what the global investors are looking at. Because if you've had the three big financial institutions basically default over the weekend in the US, people are asking, what is next? Can there be other risks out there? So we're just now starting to feel the repercussions of interest rates, which have been increased very quickly and at large magnitudes last year by the Fed. And now the real economy is starting to feel that. And of course, we have seen the first few sacrifices in the financial industry, but the real question is there going to be other names out there, maybe not just in the financial industry? And that is really what worries the markets, and that we're seeing the risk of and the selling that we have seen over the last few days in across all equity indices.
Could large US banks be infected now? Not only the small banks?
Well, in terms of solidity, we do not think so. In terms of market price, as in the price movement of the shares, then yes, probably the financial sector will remain under pressure. But in terms of the large banks, we don't think so, because looking at the balance sheet, they should be relatively solid and be able to basically manage and go through the current stressful scenario. So we do not see a repeat of 2008. And then once again, given the Fed movements, all those risks are unlikely to be materializing. But again, the main question here is confidence. So what you're probably going to be seeing is, again, more deposits being drawn out by the smaller banks, whether that's because of a fear of smaller banks potentially defaulting, or that's because basically depositors have found out that it's better to actually start getting some interest rate return on your liquidity just than leaving it at zero in some of these banks. And therefore, that's definitely an issue which is going to remain with us. But in terms of large names, US banks, we do not think that we're going to be seeing any defaults in the short term. Of course, the risk is there, but we don't expect it.
Same question in Europe. European banks, could it be that they are infected now?
Well, once again, once that confidence starts disappearing, then the whole system is going to be impacted. I mean, look at Japanese banks, how much they have fallen over the last 3 to 4 days. And the same is true for European banks. And of course, in Europe, unfortunately, the headlines coming out of Credit Suisse are not helping. So overall, there is also a fear that because people still remember how bad things were in 2008 and how more or less the big headlines came out of the financial industry, investors are worried about that. And that's why you're seeing the overall declines in equity valuations and asset valuations of banks. As of today, we still think that the balance sheets are relatively solid. And here we're talking about top-tier European banks. We think they're strong enough to withstand the current stress. But clearly, the more this goes on, the more this drags on, and the more prices keep coming down and the more corporate the spreads start widening, then obviously the more stressful the whole environment becomes. And the longer this lasts, the higher the risk of potentially something more important and more impactful that could happen in global markets.
Thank you very much, Massimiliano Bondurri, founder and CEO of the SGMC Capital. Good day, good business.
Thanks, same to you.
9:20